Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock, with news of a lot of second-tier data today, and some of it isn't very good. But first, US jobless claims were in fact little change from the prior week, although seasonal adjustment generated a higher number. There are now just 1.8 million people on these benefits, but that's up from 1.5 million a year ago. Despite the headline seasonally adjusted rise, the actual data isn't really showing an increase in the new claims. But they may be on their way. The Philly Fed's factory survey dived to its lowest level since the pandemic and its 8th consecutive negative reading. The survey covers the Pennsylvania manufacturing Rust Belt heartland, and it's quite a negative signal. Chinese foreign direct investment is falling, and quite quickly now. It hardly changed from February to March and is now only 4.9% ahead in nominal terms from a year ago. In February, it was up 6.1% ahead. In the 30 years of this data, we've never seen such a month where there was virtually no change. This is very unusual and no doubt is ringing alarm bells in Beijing. Taiwanese export orders rose in March from February, but were still 25% lower than year-ago levels, a consequence of the vice China has on the island nation. And consumer confidence in the EU edged up in April. According to the latest flash survey, it was a faster improvement than was anticipated. And German producer prices rose in March to be 7.5% higher than a year ago levels, but in February they were more than 15% higher. So we're witnessing a very fast correction there recently. In fact, from February to March, prices fell at a faster pace than expected, at a very sharp 2.5% in just 1 month. Last week, freight rates for containerised shipping actually rose. It was a tiny move up, but it was the first we've seen in a very long time. It was primarily driven by the Shanghai to Los Angeles route, which rose 11%, and the Shanghai to New York route, which rose 12%. But apart from these two major trades, most other rates are still falling. Bulk cargo freight rates are still little changed last week, still running at their long-term average levels we first saw in 1988. The US Treasury 10-year yield starts today at 3.55% and down 5 basis points from this time yesterday. And the price of gold is at $2,005 an ounce and back up $11 from yesterday. And oil prices are down another $2.50 a barrel, just on $77 a barrel in the US, while international Brent price is just under $81 a barrel. And the Kiwi dollar is softer against the US dollar, now at 61.9 US cents. Against the Aussie dollar, we're weaker at 91.6 Australian cents and more than 0.75 cents lower. Against the euro, we're down 0.25 cent at 56.4 euro cents. That all means our trade weighted index is at 69.5 and down 40 basis points. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.